Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, September 5th, 2023. Before I click through all the charts, as usual, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Also, share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week out to the 3 to 5 month near-term trader and or investor. Last week we put out 2 stock picks, one on Netflix, another on Micron Technology. We'll do another 2 this week, so forth and so on. You can check all of this out with our 5-day free trial. You do have to sign up and enter your payment information, but you've got 5 days then to bow out, to cancel your subscription at no cost to you whatsoever. So you can check it out for 5 days. If you like it, which I think you might and probably will, then you'll just keep the subscription. And it's about as simple as that. So let's get on with the charts here. Take a look at the big picture. Weekly charts work our way into the day itself. Just to let you know and remind you that a couple months ago, we were testing and came off of this longer-term resistance at 309.29. That had been considered a 2 to 3 month target when we settled above this ultra long-term channel top at 168.01, which we did about 4 months ago or so. I don't have the exact dates here, but I can count the number of bars. Anyway, as we were testing this 309.29 formation, I'd mentioned how you should allow for the market to fall to channel support. Then we did within about 6 weeks of testing the channel top, and that is now 220.60 this week on the weekly chart. Sorry, 222.83. 220.60 is the 1% violation of 222.83. That is the level that, if settled on Friday afternoon at the end of a week, 220.60 or lower, we enter another sell signal. But until then, this channel bottom is, and continues to be meaningful pullback support, not only through September, but through the rest of the year. And now that we've tested it, I'm mentioning how over the next 2 to 3 months, you should allow a return to the 309.29 channel top. And that remains the play, holding above the low 220s, 220.01 on the daily chart, 222.83 on the weekly chart. We'll keep 309.29 and climbing in reach as a 2 to 3 month target. We are a solid 2 weeks through it as it is, and on the way up, I mentioned how the two speed lines that converge. This is probably a better image of that, less crowded. At one point about a week ago, these were right on top of each other. They intersected perfectly. Now they are widening, and later last week I had sort of emphasized 255.75, the descending 2/3 speed line, more than 266.46, which is now just an intraday resistance area. In other words, if we were to close above 255.75, this rally that we've had for the last couple of weeks, the momentum from that rally remains intact through September, and over the next 3 to 5 weeks or less, we should reach the 309.29 formation. So this is another way right now just to tell you about the 2 to 3, 3 to 5 week time horizon. Holding below 255.75, in other words, not closing above 255.75, will keep 222.01 in reach again over the next 1 to 2 weeks, possibly this week. I'll get to that in a moment. And inversely, a daily settlement above 255.75 does skew the dynamic into the bullish camp. It's already bullish on the 2 to 3 month time frame. It's just that the 2 to 3 week time frame was bullish coming off the channel bottom. And now that we've tested this initial 2 to 3 week target, you can actually make a case that the 2 to 3 week time frame is now two-sided, a ceiling at 255.75 and a floor at 222.01. The question is whether we will fall all the way to 222.01, and I think odds favor it for a couple of reasons. And I'm going to show you this chart right now. Last Friday, we did close just below this rising channel bottom at 249.01, which I have as an intraday resistance area. And then I've got 232.29 that may actually be in reach today, although I also have 242.53 to the downside that can contain intraday weakness. Now, Friday's low was 242.01, so we slipped through 242.53. It is a downside. I'm going by memory here, and I'm looking at this chart, a downside 3/8 Fibonacci. I'm quite sure it's the 3/8 Fibonacci for the last few weeks from the 1236 low against the 6118 high. 242.53 is a downside 3/8. And so these are our pivot points for today. I will say, and I did wrestle with whether to continue calling 249.01 a session containment level. Just know that holding below it does allow selling pressures to build. It's just that in terms of anticipating 232.29 today, that would come with a break or open below 242.53. So in terms of the day trade, and I suppose I could have shown a horizontal line here representing 242.53. That would have completed the entire concept. But you could say that the early day, right out of the gates, we've got a two-sided framework between 242.53 downside and 249.01 upside. And if we break 242.53, we should test this, I'm going to call it targeted 232.29 speed line. It's targeted as a 3 to 5 day objective right now anyway. By the end of the week, holding below this 255.75 speed line, we should within the week test 232.29 and make that, we should today test 232.29 if we break or open below 242.53. 232.29 can contain session weakness, and yet if we close below 232.29, I'm going to see if I've got them in both images anywhere, and I do not. But I will just say that if we close below 232.29, we should tomorrow test the 222.01 channel bottom, which is on the daily chart, and once again on the weekly chart at 222.83. The channel bottom at 222.01, able to contain selling not only for the day, week, also the month through September, and even through the rest of the year. And we can come off of here again and turn back up again. That's why I give 309.29 a 2 to 3 month objective, because that's just realistic. We're going to run into trouble on the way up, and we have already at this descending 2/3 speed line. Let's cover the upside today. I'll go back to this chart here and show you that if we do push or open today above 249.01, we should test 255.75. That's a good day trade resistance level. If you're long, it's a good place to take profits. If you're looking to go short, not only for the day, but into later week, it's a good place to set a short sale, whatever that may mean to you. It might mean just merely buying a 233 out of the money put that doesn't expire for at least a week, or it might actually mean, buying a 222 or a 224 out of the money put that doesn't expire for at least a couple of weeks. So if we rally to 255.75 today, this is a good 3 to 5 day to 1 to 2 week swing trade opportunity where you can set a short, the 1 to 2 week time frame, allowing 222.01 within a week or two, where once again we can bottom out through September and even the balance of the year. Now, if we push through 255.75 today, I do think 266.46 is in reach, is likely, and I show that as an intraday resistance area. And if we close above 255.75, this speed line, which we have yet to, that is our next go with buy signal, not only through the rest of the week, but really through the rest of September. I think the 309.29 formation is then in reach within 3 to 5 weeks. It could take a little longer because it is rising at a pretty decent pace. So I'll go back to this image that if we do close above 255.75, I think you should anticipate the 309.29 formation within 3 to 5 weeks. Now on the way up, I'll just give you a heads up. I only show 280.93 as my highest point, but this gap is going to be a significant filler here over the next, if we close above 255.75 today, I do think it is possible that we can reach 280.93 within the week, knowing that on the way up, the 266.46 speed line may give the market trouble on maybe more than just an intraday basis. But closing above 255.75, if your time horizon is anywhere from 3 to 5 days to 3 to 5 weeks, I see no good reason to be short Tesla. I think you should be long Tesla under that scenario. If you're not long already, there was an opportunity to go long on the 3 to 5 week to 2 to 3 month time horizon a couple of weeks ago when we were testing this channel bottom. And if we test this channel bottom again this week, that opportunity will represent. And inversely, to the upside, buying on strength, would come with a settlement today above 255.75, 309.29, then likely within 3 to 5 weeks, where we could actually top out once again on a monthly basis or longer. There will be other things up in this vicinity that I've already scouted out in the 320. So this will become really a significant range of resistance through the rest of the year. And I'll talk more about that if over the next coming days, 3 to 5 days, we happen to close above 255.75. I will say that of the two, 222.01 and 255.75, 222.01 is by far the more significant. It is a long-term support. 255.75 is near to mid-term, can contain weekly buying pressures, possibly into later September, as I was saying before, below which 222.01 in reach. And inversely, if we close above 255.75, the updraft from having tested long-term support a couple of weeks ago, 221, 222.01, can more fully unfold, if you will. 309.29 then expected within 3 to 5 weeks. I think I've said that about a dozen times in this 10-minute video, almost 11 minutes. You know, I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Wednesday's Tesla, and you have a great day.